Imagine never owning another device, yet always having the latest and the greatest. Welcome to Product as a Service, where you pay for what you use and nothing more. Subbyx raising 15 million in a Series A round from Azimut Digitech Fund and Azimut Alicrowd. Well, focusing on tech and appliances first, providing customized plans, whether you want to rent something new, something pre-loved.
The approach of Subbyx is kind of new in fixing either the price or the quality and letting you decide which way to go.
We're really trying to build the smoothest platform to make product as a service happen. And they're trying with different products. I think they're really in a phase where it's a great platform to test different appliances and what really works. Let's jump right in with the biggest round of the week. Some interesting movements. I think this week is probably kind of starts the series of bigger rounds compared to other weeks. So really we have a good kickoff from the beginning. Starting from Subbyx raising 15 million in a Series A round from Azimut Digitech Fund and Azimut Alicrowd. So very interesting deal. Let's start by considering exactly what Subbyx is doing, which is it's something that people have been trying to solve in different ways, which is the rental of products instead of purchase. So changing and shifting the mindset from ownership to subscription by applying the subscription model to product in general, starting from electronics, appliances, and other kind of products. So Subbyx is really betting on this kind of model. They have an interesting way to tackle the problem, which is essentially, focusing on tech and appliances first, providing customized plans, whether you want to rent something new, something pre-loved, aka re-put in the market, I would say, or completely used, and then they offer you different packages. The claim is that the fee is going to be either flat or decreasing, and then depending on what you choose, that will dynamically change. So first of all, interesting round, interesting bet. Not a small round, I would say, and definitely trying to bet on a mind shift of the consumers. So definitely something interesting. What is your first impression, Nick?
No, I agree with you. Leasing or renting electronic equipment is nothing new, in particular in the business space. It's sort of understood in the consumer space, for example, for higher-end mobile phones, when the mobile companies give you the phone and the SIM card and you pay as you go every month in installments. But I agree with you, the approach of Subbyx is kind of new in fixing either the price or the quality and letting you, as a consumer, decide which way to go. I have to say that this is a 15 million round, but it's part equity and part debt. I couldn't find how much is one and how much is the other. We know that Azimut led the round with several of the funds. The Digitech one that I believe is the one managed in collaboration with Fundix and the Jellyfy ecosystem. And the Alicrowd fund that comes from the crowdfunding and Mama Crowd spaces. So interesting operation, kind of a sizable one, and you don't often see Azimut deploying this much. And this week it happened twice, but we will get back to it, I think, in a few moments.
Absolutely. So Azimut definitely one of the protagonists of last week. Going back to Subbyx, I think what is interesting is also the approach in particular. So they're really pushing the platform and the easiness of deal that they're making without too much focusing on product themselves. So my guess is that they're really trying to build the smoothest platform to make product as a service happen. And they're trying with different products. So it's not that, they want to focus on mobile phones, laptops, computer, etc. I think they're really in a phase where it's a great platform to test different appliances and what really works. Because my guess is that in the future, probably we're going to have something that we will want to own for whatever reason, privacy. We don't like the pre-loved idea, etc. But some other stuff, simply, we don't care. So maybe mobile phone, I don't know if it's going to be the right fit, but think of a washing machine. Maybe that's really the right angle. So finding something that really is, sort of commoditized, high rotation. You cannot be bothered it to be broken, because then it's a real pain. And you don't even use it that much, but you use it periodically. And then, that solves like quite a big issue. So that's one angle that what I was thinking when seeing the product as a service model. So
you're seeing an outcome based type of service. I mean, I'm not. You think what you're saying sounds to me like you're not renting, so paying in installments in time, but eventually you will end up paying for outcome. You got the washing machine in your house. If you use it often, you will pay more in some way. If you use it less, you will pay less. But you will only pay when you use it.
Absolutely, that's interesting.
That's a potential future. Yes. We have the technology now to do it. The technology is starting to be present in all the appliances. It's something that you're seeing maybe a little bit more in the industrial space. But I can totally see it happening in the consumer space.
Absolutely. And the other thing, well, there are two other points which I think it's interesting, of course, is on the line of what you're saying, which is the data play. So now it's very easy to collect the usage data on different level. IoT has reached a granular way to analyzing like product usage. So that's really a small step to actually understand what are the habits of consumer and how do they use it. So again, probably we're shifting again into more of a data play and then building businesses on the data from that, which also bites into anything which is sustainable, which is, I use, it's really, expensive and wasteful to just purchase and not use something, the wasteful angle. Renting, like pre-owned or just pay-as-you-go sort of deal, that's really also toward optimizing that kind of mindset. So that's definitely interesting. And again, it's enabled thanks to data, technology, and different business models. So definitely an interesting deal on different angles. That's what I saw. Yeah. All right, moving on to another of the big round of last week. Let's talk about Tensive raising 14 million in a Series A round from Panakès Partners, EIC Fund, CDP Venture Capital, Recomec, and a few business angels. So essentially, Tensive is a biotech company, essentially working on polymeric scaffolds which are applied as bioabsorbable implants. So essentially they're working into solving problems from first breast cancer victims that need a reconstruction, and they're really developing something technical so that basically everything is more absorbable, is just easier on the body. And again, my background is not in medical sciences, but that definitely seems something which is definitely worth mentioning, and it's probably a problem that afflicts a good number of people. What is interesting is that another example where Panakès Partners is really on top of their game, being present in some of the biggest and most promising round in Italy, I would say. So definitely kudos to them. And I don't know if there is anyone like Panakès that works as in depth in Italy into health tech, biotech. At top of my mind, I cannot really think of any other so far. So excellent job for sure.
Yeah. I have to say, so I agree with you. So this is a very interesting round. This is another proof that some type of startups take time to get to market. Tensive was founded in 2012. very research intensive, and I think they're undergoing clinical trials, so it's not yet close to market. So the life sciences space is totally different than the digital and the software spaces. I have to say that in Italy we have much more experience in the life sciences space, and many more investors that have been around for a while. Maybe not strictly speaking funds, but a lot of managers, club deals, operators. So there is experience. I think it's worth mentioning that Indaco launched recently another biotech fund, so just to name one. So we have had a few. But I agree with you, Panakès has been very active in the space. They raised two funds, the second one a couple of years ago, I think. So they're very, 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 very active.
Maybe another topic, thinking about biotech, is also of course, the participation of CDP, which really doesn't stops in any kind of sector. So they're really present across the globe. And when we're going to mention the report from Growth Capital, CDP has been in 2024 some of the most prolific investor of last year, which makes absolute sense. And on top of that, also the EIC, which we see sometimes, and especially on bigger rounds. So definitely good news, and definitely good news for the ecosystem also. Right, moving on. Let's talk about Indigo AI raising 10 million in a Series B round from Azimut. As you were mentioning, Nick, Azimut is kind of the star of the last week. So again, being present in some of the best play, especially in AI. So Indigo, we've been talking about Indigo in a few episodes, just in a very interesting path of growth. Basically, they're focusing on conversational AI applied to customer services for businesses. They've been working with a lot of great brands, some of the biggest brands in Italy, I would say, and they are, as of today, one of the top players in Italy for conversational chatbots, AI-driven here in Italy. So definitely kudos to the team. Excellent deal.
Yeah. I have to say that the team at Indigo, they started early, way early, when chatbots were basically seen by everybody like toys that didn't work, because they couldn't answer basic questions, and I have to say, they stayed on their course. History seems to be on the side, so let's say so.
And to be honest, it can only get better, because I feel it's kind of the renaissance of chatbots, because they've been there for years and people hated chatbots for a long time, but now, thanks to always a way better way to solve the Turing test, thanks to advanced LLM models, then people kind of get it, they get what they want. Plus, there is also the integration, a better, more granular way to solve problems, to connect with human operators, to direct to different queries. So it's a different planet, essentially, from what we remember at the beginning. So definitely we'll see more and more development in this area. And I'm sure also customer-wise, people, just interacting on a daily basis with AI, like stupidly ChatGPT on the phone and talking to the phone, or Siri, then it's just easier for the new generation to kind of be used to talking with a chatbot at the beginning. It's going to be perfectly fine. Up to a point, of course, when you lose your mind and you start insulting the company profusely. That's when probably the human operator will intervene and step in. All right. So on a last note, it's always worth mentioning all the reporting that is happening in Italy. So starting the beginning of the year, usually with Ernest Young that we discussed the other day. Another great report to keep an eye on is Growth Capital in conjunction with Italian Tech Alliance, providing some data on 2024. What I really like is the comparison that they're doing with the global VC ecosystem. So great job for sure. Basically pulling in numbers from the US, from Europe, and comparing it to Italy. Of course, different scales, different trends, but still I think it's worth seeing where Italy is as an ecosystem compared to other ecosystems. So that's definitely powerful. So definitely interesting and worth a look. Any thoughts on the latest report, Nick? I don't know if you had the chance to take a look.
Yeah, of course I did. I tried to read all of them because it is interesting to see the different points of view from different operators in the market. The report stands at 1.5 billion in terms of capital raised by Italian startups. Of course, the most important thing is to understand the methodology, because if you read 4 different reports, you get 4 different numbers, and the differences are quite wild. My number is much lower, as you know. UI, they published their barometer a couple of weeks ago. They had a lower number, 1.2 billion. Growth Capital has a different way to account for some selected rounds, and this brings the number at 1.5. A Bees, that's an online newspaper about technology and financial world in Italy, have their own publication, 1.7 billion. So it's quite wild. The key point, as you said, is we are growing a little bit with respect to the previous year, 2023. We are still kind of behind the other comparable European markets. We need more later stage rounds. So I think if you look beyond the numbers, the sheer numbers, that's the key message that comes out. We are still missing one final major report, but I don't know whether it will be released sooner or later. The PEM report, something that will close the year.
Awesome. All right, Nick, thank you so much for joining. This brings us to the end, and I'll see you next week for another great episode of the Week in Italian Startup. See you later.
Ciao, Jack. Take care. Ciao, everybody. See you in a week.
Italian company raising a good round. This is the value proposition of Subbyx. And the team at Subbyx is trying to make it happen. And the team at Subbyx is trying to make it happen. And the team at Subbyx is trying to make it happen. This is the value proposition of Subbyx.